So the dollar seems to be in a sweet spot, but how long can it last? Joining us now is Peter Rosenstreich. He's Chief Market Analyst at Advanced Currency Markets, or ACM. Peter, thanks for joining us.
Thank you for having me.
Sweet spot. Would you describe it as that?
I think so. I think we're looking at the charts right now, and we see the dollar in sort of a reversal pattern across the board. Looking at the fundamentals at the Eurozone, we think that yield expectation is going to disappoint the market, meaning that at the next ECB meeting, they're most probably going to hold or look on the cut side, and I don't think they're going to continue their hawkish tone. I think we'll see the figures out of the Eurozone industrial production this week going to disappoint the markets again, showing that the effects of the currency crisis are slowly starting to take effects in the market, and I think that's going to play into the price of the euro.
Given the jobs report on Friday, we've got, of course, that 0.5% move down in rates on the 18th of last month. We've got the minutes on Wednesday. Is this it? Do you think that they misread the economy given the labour market report that they had previous to that at the start of September?
You're referring to the Fed misreading the market, correct? I think there is a sense that was the case, especially when you look at those revised figures. However, I think the market really wanted to see the 50 basis point cut, and that's what it gave, and that's what the sort of the drive of the market has been so far. So I think it was a smart decision. I don't think the fundamentals were really there to support the change in monetary policy.
Peter, what does this mean about the attitude of the Federal Reserve then? Should the market watchers, people like yourselves now be concerned then if the Fed is giving the market what it wants, as opposed to what the economy needs, perhaps?
I think it planted a seed of exactly that, but I'm not going to go so far as to say that we're second-guessing the Fed, but I think we need to keep that thought in the back of our minds when we're reviewing all of the FOMC meeting minutes, as well as hearing from the speakers that will, this week.
What about the data? We've mentioned the non-farm payrolls. This is a fairly volatile number. What else should the market be considering now?
Well, I think the most important economic data, at least in my mind this week, will be the retail sales figure. And that goes directly at how the U.S. consumer, the backbone of the U.S. GDP, is faring. And if that number continues to be solid or above expectations, I think it'll show that the effects of the credit crisis hasn't trickled down. And I think the Fed will hold monetary policy.
Peter, when you look at the retail sales and when you look at the consumer in the United States, how do you separate them, or should you be separating them when you look at the higher-end consumer, high net worth individuals, compared with the ones who have been suffering at the base end of the subprime fallout? Where does the economy most be influenced?
Well, I think that's a great question. In terms of segregating the different clients, I don't think that the foreign exchange market really has that luxury of dissecting the market in that specific nature. And I think you have to take the retail as a general number and how it's affecting the economy. But you have to realize that the lower end of consumer is a smaller segment of the market, and while the subprime crisis is going to directly affect that portion of the market, it's not going to trickle through the entire marketplace, like many pundits have speculated.
What about volatility? What about credit spreads? They're still pretty wide here. Do you see any prospect of these narrowing?
I don't think so. I think there's enough uncertainty in the market to keep them quite wide.
Great. Peter, stay with us. Peter's going to be staying with us, Chief Market Analyst at Advanced Currency Markets. You've heard some of his views there on the dollar, and coming up after the break, we're going to be asking him about the Australian dollar. Now, we saw a 23-year high against the greenback last week. Is that trend going to continue?
Now, will the Aussie reach parity with the American currency? We're going to be still with our top currency expert there as we look at the future of that currency and ask him, Peter Rosenstreich, that is, whether investors can still make money from the carry trade.
Welcome back to Bloomberg Television. The Australian dollar reached a 23-year high against the US dollar last week. Investors say that rally is set to continue on record exports and unprecedented prices for coal and iron ore.
Now, according to the bond market's biggest international investors, the Australian currency is set to follow the Canadian dollar to reach parity against the greenback. Australian interest rates are set to rise once again as the central bank is focused on curbing inflation. Well, we're rejoined by Peter Rosenstreich. He's chief market analyst at Advanced Currency Markets. Peter, thanks for sticking around with us. Something you agree with? Australian dollar heading the same way as the loonie?
I believe so. I think all the fundamentals are in place for a continued strong Aussie dollar. I think the consumer is holding them well with those unemployment figures that we saw. Construction index is going to do well this week. I think the fact that the RBA has continued to hold rates at looking to continue to tighten in above the 6.5%. I think all bodes well, as the commodity story that you just mentioned, all bodes well for the Aussie dollar to continue to appreciate against the US dollar.
Peter, also fundamentals you mentioned there, but what about the effect of the carry trade too?
Well, I think that just helps the Aussie dollar. I mean, we're seeing increased risk appetite across the board, and that rewards the high yielders. And Aussie dollar is probably the best play out there right now.
What about the carry trade when we look in terms of the yen as well, Peter? We've seen the yen fall again today. Risk aversion perhaps coming back off the table. Can we really rely on the carry trade as a form of investment?
I think so. Well, absolutely. I think, if you look on a day-to-day chart movement, you might have some volatility, but the overall trend is pretty darn strong. So I think that's still a very good place to start your foreign exchange trading. I think the fundamentals in Japan, despite the tank and serve being a little bit upbeat, is still very much in a weaker condition. I think the BOJ this week will continue to hold rates at a sort of a below normal level, and I think that bodes well for any trader that's looking to sell the yen.
Okay, well, it's becoming expensive for you in Canada, expensive for you in Australia, and it's a bit of a nightmare for you over here in the UK. How long do you think this is going to last?
Hopefully not too much longer, but unfortunately I think the markets say that this is going to continue for quite a while, especially with the uncertainty in the U.S. dollar in terms of rate expectations. While I think there is some changing sentiment on the U.S. dollar, I don't think it's as drastic as we really need to see the dollar come back to some significant levels.
Great. Peter, good to see you this morning. Peter Rosenstreich, the Chief Market Analyst at Advanced Currency Markets.